Folks, welcome to Thursday Night Stock Charts Live, the 5 p.m. edition. Sorry for the change up in times. I had a conflict that I had to make it an hour earlier today. So, what we're going to talk about are the charts. We're going to talk about the closing price action of the weekly charts. It is Thursday night. We start to wrap our heads around the quality of the close of the week. How do we want to set up for next week? And then we'll talk about our strategy with members on Saturday when we go over the week ahead commentary. If you're not currently a member, 14-day free trial offer, link below. We're going to also talk about why the market's corrected today, and should we expect more of it? How severe was the selling today, and what did we do about it? So let's get started. We have a lot to go over, a lot of headlines out there. A lot of these headlines are conflicting. So there's only one real certainty that's out there, and that's that the Federal Reserve is going to raise rates. And I don't know how much more upside we're going to have in the names of stocks that are not making money, because their borrowing costs are going to move up higher. Their earnings per share are going to get impacted. They are already expensive. They're only going to get more expensive very, very soon. So let's get to it. Okay, so let's begin with the strong data that came out today, and that was the ADP employment numbers. Remember that tomorrow we have the non-farm payrolls from the government, and traditionally they have beat on that number, but only to revise the number downward the next month. So the government numbers are purely manipulated. Did they manipulate the ADP numbers? I don't know. But it certainly reinforced the hawkishness out of the Federal Reserve. And the message from Dallas Fed President Lori Logan was that she is very, very bullish or hawkish on moving higher with interest rate hikes. Not good for equities. Although the equity markets have shrugged it all off ever since the last Federal Reserve meeting. Expectations for interest rate increases by market participants have been, I haven't seen them below 75%. This is not a very difficult game. The thugs on CNBC, what they want you to believe is that this is a real serious game of only the most educated Harvard grads that appear on their network. Only they can explain it to you. They'll chew it up. They'll spit it in your mouth. They'll give you all the information that you need. In reality, this is a very, very simple game of playing Fed watch. The Federal Reserve always, but always under Jay Powell, delivers what the markets expect. Stick around in the next couple of minutes. I'm going to go over what the markets are expecting, because they're expecting higher yields, higher expectations of a Fed rate increase in July, even more so than it was yesterday. And it's the highest read since the last Federal Reserve meeting. So let's talk a little bit about the ADP numbers. And they blew the doors off of what the markets were expecting. The expectation was for the creation of 225,000 new jobs. The actual read was 497,000 new jobs in June. Don't get too excited. We're going to break these down in a moment, because the results are kind of mind-boggling. And let's just cut right to it. So here's the chart. Huge beat, but what kind of jobs are they? When you take a look at where the jobs were found, educational health services, okay, those are good paying jobs, but the vast majority of the beat could be found in leisure and hospitality. Folks, these jobs do not pay well. Unless you are an executive of the company, they do not pay well. So be careful of the headline number. Always drill down and take a look at the quality of the number. If you would have told me that the vast majority of jobs gains came from manufacturing, uh, oil and gas exploration, high paying wage jobs, transportation. Okay, that's a good number. This is an okay number. It beat, but a lot of it has to do with leisure and hospitality. Bear in mind that ADP has underestimated the official BLS data for for 9 of the last 11 months. So they've undershot the government's numbers. Something tells me that, you know, the guy that started ADP was, I forget his name, but he was a senator out of New Jersey, Democratic senator, and a real ruthless, nasty son of a gun. And I'm wondering whether or not that this could be somewhat manipulated, because the glaring difference between ADP and the BLS numbers, again, I mentioned it earlier. We're going to get those numbers tomorrow. BLS, ADP has been chronically below that read, not validating the establishment numbers, whereas the household survey has come out and also, like ADP, not validated the establishment survey's numbers. So me personally, I think that we're seeing a lot of shenanigans going on here with these economic data. ADP founder, let me find his name. Founder. Yeah. Frank Lautenberg. He died in 2013, but he was a Democratic politician. So they're hooked up to the Democratic Party. I have no evidence that this is anything that's transpired, but I don't trust anything anymore. I question everything. So just be aware of the potential ties with the government that ADP has. And again, I am not making accusations. I'm just pointing out a fact. Uh, let's. There's not much to go over here, except for these numbers here. I want to go over them again in a moment. Uh, PMI numbers, ISM manufacturing, these numbers were disaster areas. Any number that is below 50 on the PMI, a read below 50 is a sign of contraction. We are well below 50. We have been below 50. What else do we have here? We know the minutes came out hawkish, no great shock. Construction spending, that was a beat. ADP, we went over. Initial jobless claims, they spiked back up again. But tomorrow is going to be the pimp Mac daddy of all economic data, and that is non-farm payrolls. Pay attention to when the numbers released. Don't focus so much if we get a beat on the July numbers. Take a look back. Go back to the June number and see whether or not they revised that down. My bet is that's what they do, because they've been doing it every month. They beat on the headline, and then they revise down the number the following month. Also, pay attention to wages. This is what Jay Powell is going to have his eyes set on. Wage growth. That's inflationary. In terms of valuation, despite the fact that we had a 3/4 basis point sell-off on the triple Q names today, they're still sporting a PE of above 30. This is not a cheap market by any stretch of the imagination. I found this interesting, and I did a little bit of homework on it. I wasn't going to talk about it, but then once I did my homework, I thought, you know what, let me share this out, because very interesting stuff. Something just snapped. Consumers, as a matter of fact, I got to change my screen because I don't want to ruin the surprise for you. Let's go down to present day. All right, now I'm going to reshare my screen again. I have a show to carry on here. I got to keep everybody interested. There we go. Okay, so here we go. Consumers panic. Search pawn shop near me blasts off. I said, okay, before I present this or talk about it, let's go back and take a look. Let's validate what we're seeing here. And I found this very, very interesting because I got led down a rabbit hole, and I'm going to share my findings with you. So this is a one-day view. This is the same exact view you just saw on the article. So clearly, from yesterday, pawn shops near me has risen dramatically. It gets better. Let's go back to a year, the past year. Look at the trend up higher. And the top states: Texas, Nevada, Mississippi, Georgia, Louisiana. Let's pull back even more. Let's go back 5 years. 5 years. Look at this. Look at this. Since the beginning of this year, this search term has blasted off. Let's go back further because now it gets really interesting. 2004 to present. Look at this spike. The last time we had been at these levels was back here, back in June, actually July of 2019. So I says to myself, what happened to the stock market, in particular the S&P 500 and the consumer discretionary ETF XLY? How did they behave from that time period when the last time we saw this spike up higher? So here we go. S&P 500 weekly chart. We got to find July of 2019. Here's July of 2019. All right. So July 1, and from July 1, the highs of July 1 to the following month, we saw a correction of around 9.5%, probably a little bit less than that. But from the peak of July 2019 to the trough in August, there was nearly a 9.5% correction. Then when you take a look at the XLY, the consumer discretionary ETF, which I've been chomping at the bit to short, you go back to that very same time frame. Here's July, peak of July to trough, around a 10% correction. So pretty significant. Within a very short time period, a significant correction in the equity markets. Yes, they did rebound, but just a heads up, this is a warning flag on the track. Let's go to comments. Seymour Rivers. Thank you very much, Seymour. Appreciate that. I searched for pawn shops near me recently as a buyer, though. Gotcha. Okay. There's a bullish, optimistic way of looking at it. Okay. All right. So let's move on because we need to go over the weekly charts. CRE nightmare for CMBS holders. Basically, this is the debt on commercial real estate. Office mortgage delinquency rate suffers biggest 6-month spike ever. Do they have a chart? Yes, they do. Not a great chart, but you could see that this is a big, significant move here on delinquencies. So TREP's overall delinquency rate for all types of CMBS rose 3.9% in June, including the loans that were past their maturity date, but were still paying interest. The delinquency rate would have risen to 4.66. So the reason why I bring this up is that we're going to go over the chart of the banks in a moment, and the banks are not looking good. So the commercial real estate market is a major problem for the equity market. The equity market just doesn't understand it yet, but they will. They will. They understood it for a brief period back in March when the regional banks started going belly up until the Fed bailed them out. So it's not done yet, and they're going to continue to increase interest rates. That's the reason why these banks went belly up to begin with. They're going to do it again. They're going to spike up interest rates yet again, and they're going to hammer these regional banks. And occupancy rates are or vacancy rates are rising. Occupancy rates, therefore, are declining. Bitcoin. I wanted to go over this a little bit more detail. Bitcoin is digital gold. BlackRock CEO flips. This guy has about $7 trillion under management. Now he's going to get the first ETF, along with Fidelity. So this is why I continue to dollar cost average into the shares of Bitcoin. Let's see what they're doing on this news. They're down on the month. So no real goose here on the shares. Initially, we got a knee-jerk reaction, attempted breakout, a lot of resistance up and around 31,750 on Bitcoin. I did a video or a live stream about 2 or 3 weeks ago. I was calling for a price target of 80,000. If you go over the monthly charts and you extrapolate out the prior highs, I'm looking for a price target of 80,000 on Bitcoin. Not tomorrow, not this year, but that's going to be our price target in the short term anyway, next couple of years. Longer term, who knows what's going to happen to it. All right, so with all of this bad economic data that's out there, here is the probability of the Federal Reserve raising rates in July at 92.4%. The Federal Reserve under Jay Powell has never, ever disappointed the market participants who make up this tool. So I don't expect it this time. The only thing that could shake up market participants and the markets moving forward is forward-looking guidance out of the Federal Reserve. That's what happens during the presser. Job openings tumbled by 500,000, even as job quits unexpectedly soar. Job quits are exactly just that. It's the people quitting their job. Yet job openings tumble. Maybe they were taken up by new entrants into the workforce as represented by the ADP employment report. Not quite sure. Or is it the fact that companies are just not filling jobs as they had planned? So keep an eye on the trend, not so much on the initial headline number that you read, but you could see here that the change or the trend in job openings is declining since 2021. Clear and defined. Still not a horrible read here, but the trend is clearly down on job openings. U.S. services sectors, FUBAR, PMI cost pressures pick up, and ISM service prices lowest since March of 2020. So we spoke about this earlier. ISM, any read was ISM here. We got to read down below 50. This is a sign of contraction in the economy. Cost pressures pick up. And this is what's keeping, you got to think about it. The Purchasing Managers Index is basically a survey of purchasing managers, and they're not optimistic. And they're citing cost pressures. So this is what's going to keep the Federal Reserve spiking interest rates. And this is the other reason why the Federal Reserve is nervous as well. This is a chart that goes back to the 1960s to 1970s when you had inflation begin to pick up, and it pulled back just as it's done now. Then it began to pick back up again. The Federal Reserve lost sight. They cut rates, and inflation just ripped up higher, which is why Fed Chair Powell is being very, very deliberate in what he's doing here in at least trying to talk tough on rates. And when you take a look at the Federal Reserve's balance sheet, The Federal Reserve's balance sheet is the lowest since we got to go back to last year at a minimum. 8.2. We have to go back to 2021 to see the Federal Reserve's balance sheet as low as it is. Now, this is the Federal Reserve taking treasuries off their balance sheet, and they're either A, letting them expire, or they are selling them into the market. So, what happened today, we're going to go over, is that the 10-year yield broke out, and it was not a minor breakout. It was a major breakout. In fact, let's go on over and take a look at the weekly charts of the markets, and let's talk about it. First off, we're going to kick it off with the yield curve. Hopefully, they have updated this. Let me check. This is as of the 5th, which was yesterday. You could see the yield curve is rising. For you folks that are out there and you're wondering, what the heck is the yield curve and why do I care about it? Well, you don't really have to care about it when the yield curve is inverted. You worry and declining. You worry about it when it's rising, and that's when the equity markets begin to roll over. So let's refresh this. My guess is that we spiked up higher, and we did. Let's take a look at a monthly chart and how we're looking on a monthly time frame. Go to my other one. We did put in a new monthly lower low, but clearly we have found some support down here. And for those folks, again, that you're not familiar with what the heck this is and why you should care, overlaid here. In short, first, let's go back to my old entry into Yield Curve 101. The yield curve has predicted every recession since 1955. Once you get an inversion of the yield curve since 1955 and it's begun to steepen, meaning rise, you've seen a recession. And you saw it back here, dot-com crisis. We all know what happened back then. Big recession, financial crisis. We all know what happened back then. Big recession, COVID, big recession. And here we go. We are here yet again, the everything bubble. So if we begin to break out and above this prior high back here, last seen back in May, buckle up, folks, because I can bet you bet your bottom dollar that the equity markets are probably in a correction, if not a lot worse. Yields. Now, the 10-year yield, folks, this is no joke. This is a major breakout. In fact, I need to, God, remember we were calling for this inverted head and shoulders back here? Look at how far we've come. So here's your breakout. Boom. We do have resistance above, but what I want you to pay attention to is this number here. Last seen back in 2022, 44.33. That's when the equity markets back then began to come under pressure. So beware. Now, the companies that are making money, the companies that have already done cost cuts, they may be able to stand a 4.5 handle up to that point before they begin to buckle. But companies that are not making money and need to roll over their debt, they're going to roll over their debt to higher interest rates. They're not making money. Therefore, they're going to be making less money. So they have no price to earnings multiple. It's just going to be a very, very expensive and speculative stock. So be very, very careful with the products that you're buying out there to ride this market up higher. Best of breed. And you can see on a daily time frame the response of the bond market to the news out of ADP, a big move up higher. We're going to get a pullback here. We're extended relative to the third standard deviation Bollinger Band. So expect a pullback on yields, but I think it's a pause that refreshes, and we're going to get a move back up higher. TZ Burden, welcome. How about I am glad I checked YouTube, catching up on. I've never heard that. I've done it myself before, but I've never heard somebody doing it well live. That's funny. Cool. All right. So bonds cratering. They are down nearly 3% on the week. This is very bad stuff. So our bonds are going lower, borrowing costs moving up higher. Not good. The dollar still up on the week. Let's see if this is updated. Now, this is actually as of yesterday. Let's go to UUP. Up on the week, but not looking good. Lots of topping action. Not loving this chart. Let's take a look at euro yen. Begin with the euro. Euro consolidating. Looks like we're getting ready for another move up higher. Bearish dollar. Yen continuing to test the support level we spoke about last week. I'd be looking to buy yen here versus the US dollar. Let's drill down further. Now, the machines, I subscribe to a report that tells me what the machines are doing. They are still long of 100% long of S&P and NASDAQ futures. They cut their holdings short term on Russell 2000. And as it relates to the yen, the machines, yen, they're still 100% short, both long and short term on the yen. I'm liking the yen here as a potential trade to the short side because at some point in time, the machines are going to cover and they're going to get long. Wrong chart. Let's update this a little bit. Showing a little bit of strength here. How's our volume? Volume is not good. You saw a bit of buying back here, but no follow through on it. So that's the yen. We'll be looking to put on a trade here. Momentum as measured by RSI beginning to build. Stokes looking good. So we're probably going to be long of the yen very, very soon. VIX. Larry, is this an AI mini bubble? Just postponing a series. I personally think that it is. I agree with you. And as a matter of fact, I saw an article, I think it was on Zero Hedge, that showed that usage for the Chat GPT, I guess as measured day over day, this is the first decline they've ever seen in usage of Chat GPT. I don't know why that's difficult for me to say today. SPXU. What is SPXU? Good call. But I want to pay attention to the weekly and monthly charts. One trading day left to go. Inside week, no new weekly low or low. All right, to the VIX weekly chart, we are up on the week, but folks, clearly something just happened. Hopefully, I didn't cut the stream. Okay, good. Clearly, we are well off of the highs of the week. Why is my mouse being wonky? Please help me. Good. Resistance immediately above. Stokes looking really good here. Momentum beginning to build. RSI has a breakout. Let's take a look at the daily view here. This is not a daily view. This is a 5-minute chart. There we go. Daily view, big spike up higher, up nearly 9% on the close, well off the highs of the session. But this is all, it was expected. I mean, take a look at these compression ranges here on the VIX. I mean, we didn't just draw these lines today. We've been drawing them for a couple of weeks now, a few weeks now. So we now have a breakout on the VIX. Now the Dow transports, they're down on the week, but they still look pretty darn good. Down spot 84% on the week. Let's go to a daily view. They held support and they bounced. Volume was heavy though. Dow Jones Industrial Average down on the week. 1.41%. No volume. No volume. And you could say, well, it's an abbreviated week and we also have one trading day left to go. Okay, let's take a look at a daily chart. And when you take a look at the daily chart, volume was not that heavy. All right, so well below average. So I can't tell you that I was in there today getting short hand over fist. I wasn't. We took advantage of the sell-off. We added more Tesla puts yesterday afternoon, right near the close, right near the highs of the session. And they were overbought intraday. I expected a pullback. I didn't expect the pullback that we got, to be frank with you. But we took advantage of the blood in the street situation that we saw this morning, and we took those shares or those contracts off. So that made us a nice profit on those contracts. But still, as a whole, on a short of Tesla, we're still down on the trade. So I'm going to look to add more to the Tesla short. But we'll go to Tesla chart in a moment. I wasn't all that excited about the volume on Tesla or on the Qs today. We'll go to the Qs in a second. So light volume on the Dow Jones, S&P 500 weekly view, still holding a breakout point. The trend is still up. I don't care what today looked like. Very light volume on the day. And again, we'll take a look at the daily chart. Check out the volume. Did we have panic out there today? Volume was about average. Wasn't horrible. And a lot of that volume, we just simply filled the gap. We filled the gap that opened up on the 30th, and we held it, and we bounced. So could there be more of a pullback here? I wouldn't be the least bit surprised. Equities are very expensive. Economic data not good. Federal Reserve still hiking. So I'm not sure what's keeping the market up. It's mind-boggling to me. You have the machines. I get the report. The machines are fully invested. And once the momentum gets going in the wrong direction, they're going to start selling because they're programmed to sell. So if you have big profits in this market, think about lightening up just a bit, especially if you are on margin. As for the Qs weekly chart, we are very, very overbought as measured by stochastics and have been extended. Also, take note of where we're at and where we stalled out at, right where you had a ton of resistance above. It only makes sense that we get a correction here. Down volume on the week is very light. MACD, very, very long in the tooth. Very extended. Daily view. Now, this is what I call the Talon bear flag setup. He called it, so therefore I give him credit. I mentioned this last night on Market Wrap that we were at the upper band of the Talon bear flag setup as represented in red. What did we do today? Well, did we break it? Do we want to make that call? Let's just say we closed at it. Let's be conservative. We closed at it. You could argue we did break it. We're hanging on by a very thin thread here on a daily time frame. Momentum, lower highs as measured by RSI and stochastics. So did we go adding to other shorts today? Yes, we did. Qs. We started shorting the Qs using put options. However, they're financed by another option strategy as well. So 14-day free trial offer. The banks broke down this week. So we were in a uh, very tight wedge formation. That wedge formation was negated by last week's price action, which was very strong. This week, we remain in a very, very difficult situation with the banks. And if they break $33 per share on the XLF, the banks are in big, big trouble. Let's take a look at the regional banks. Regional banks, weekly time frame, not horrible. Holding support. They're only down 24 cents on the week. What do they do on the day today? I'm not liking these stochastics. They look like they're going to roll over. Lower highs. How was volume? Volume was light. Technology, no new weekly higher high. Not much to talk about here. There's resistance above. Actually, no, there's not. Resistance above on the Qs. Yeah, there is resistance above. We did put in an intra-week higher high versus this prior high 4 weeks ago, but they're struggling to break through it. Volume to the downside, very light this week. Semis down on the week, over 2%. Very light down volume. This is worthy of a daily check. Broke support. We have a double top here. If we break down below 146.83, that's going to be a confirmation breakdown on the semiconductor sector. And they're going to be reporting earnings within the next. We had MU that already started, but they really don't begin until you get the big banks starting next Friday. Then you get then you get more big banks the following week. Then you get the regionals the following week after that. So within the next 4 weeks, you're going to have the semiconductor names begin reporting earnings. And a lot of the big mega tech names that are going to be coming out, mega cap names coming out the week of the 24th. That's the week. We have options expiring, a lot of them expiring on the 21st that we are short of. Not long of, but short of. LEBU, weekly chart. These are the biotechs. Avoid this right now. We have support down at 512. I'd be a buyer at that mark. We broke a bear flag setup. I think we do go lower here. We were down today on volume. Consumer staples holding the breakout. They're actually up on the week. How's volume? Light. Consumer discretionaries. Looks like they're going to fail on a breakout here. 1 trading day left to go. A lot can happen. Let's go to a daily view. I'm looking to short this. Yeah, very extended here. I will probably be shorting a rally if we get one tomorrow on the XLY. Let's check out the quality of the close. Let's look at the volume today. Big, big volume. Let's go to a 30-minute chart. Yeah, this looks like it's going to break. I'll show you what I mean here. So here's your lower high. Here's your break to a new lower low. All right, once we broke the support level this morning, the machines just started selling. And here's why I say I think that we break lower tomorrow, because there was blood in the streets this morning. Then they limped XLY back up along with the rest of the market. They limped it back up, and then you got more selling into the close, breaking the lower band of that rising wedge formation. or ascending wedge formation, they're usually bearish. So looks as though we're going to break lower here. We're looking for a lower high on Stokes. Look at the volume into the close. This is not mom and pop selling 100 shares of the XLY. This is, or these are the machines selling. And right now, I'm going to go over this tomorrow with members. So the report I just referenced was the report that came out, the machine report, which came out this morning pre-opening. So it's reflective of yesterday's price action, not including today's. So the consumer discretionary ETF, the machines are 100% long of consumer discretionaries, both long-term and short-term, fully invested. My guess is that tomorrow morning we're going to see some distribution on this report as measured by the machines selling. Also on the NASDAQ futures, my guess is as well. Emerging markets, avoid this, folks. They will trade down with the rest of the market because they're equities. They're going to get margin calls and they're going to sell whatever they can sell because of liquidity. They need to meet margin requirements. Now I'm going to update this. We are long of this. And I haven't added more because the dollar has been strong. But I am bearish on the market. And I'm worried that we have an ascending wedge formation here. And that if this market breaks lower, even if the dollar weakens up as well, you could still see selling here on emerging markets. Now, when we do get the big sell-off in this market, and it's going to happen, it's just a matter of when. When does it happen? When we do get that big sell-off, and if the dollar sells off along with, not that I'm expecting it, but it can happen. If the dollar sells off along with the equity market, bringing down the emerging markets, folks, I'm going to be buying emerging markets when they're oversold, hand over fist, more so than U.S. stocks. So if you have a weaker U.S. dollar and emerging markets beaten up, that declining U.S. dollar is like a tax cut for emerging markets. And you take a look at an overlay of the performance of the U.S. dollar versus emerging markets, it's like they're inverse completely. Energy, not looking good here. Biden, for the 14th consecutive week, sold more oil out of the Strategic Petroleum Reserve. Daily view, this is not looking good. As for oil, it's up on the week. It's actually looking pretty good. Light volume. What did it do on the day? I believe it was down as of yesterday on the week. Good day here. I think oil is looking like a buy. Let's see how the machines are positioned on oil. Oil, crude. They're only 35% long of oil. They have a lot more buying that they could do, sending oil up higher. Same thing with home heating oil. Natural gas, they're fully long of now. Let's take a look at natural gas because I was talking about when they were short of natural gas and then they began to buy. Bring up UNG. Yeah, nice little rally off of that low. So the machines are now net long of natural gas. Gasoline. I don't get a report on. Oh, I do get a report on gasoline. They're 35% long of gasoline. Come on, need a break. Driving me crazy. There we go. Okay, gold. The machines are short of gold, and they're 55% short of gold of their intended position, making an assumption that 100% is their intended allotment. And it looks as though they are correct in their call. Uh, if we close down below 1900, you could see 1850 in pretty much a heartbeat on gold. Daily chart. Holding on to support here. Momentum appears to be, again, rolling over on gold. GDXJ, the gold mining stocks, down 3.22% on the week. Light volume. Nugget, down 7% on the week. There was a clear rejection of that attempted rally. And it looks as though we're probably going to head lower here. Let's go to a daily chart. At some point in time, these are going to be a buy. And we will be back in there. We booked profits. I forget what date it was, but it was now a couple of months on these names. We still have a position, but nowhere near as big as what it was. Thank God we got out. Once we start hitting the 20s on Nugget, I'll be looking to re-enter that trade more aggressively. Right now, we just have a fraction of what we had. Volume still very strong to the downside. As for silver, it bucked the trend yesterday on a daily chart, but today it gave it all back. Now down on the week. Looks as though we're going to move lower on silver. Let's talk a little bit about Tesla. We'll talk about that trade we did today. Actually, we put it on yesterday. Took it off today. Now, we're going to update this chart. Because if Tesla breaks out, technically I could make the argument that we broke support today, but I'm not going to. I'm going to be conservative. If we break the support level, prediction number one is that we're going to come down. We're going to fill this gap here. This is the day that Tesla came out with big beats on their production numbers, and the shares flew up higher. There's only one problem with that report, and that is that they didn't share how many cars they have in inventory. Have they sold all of those cars? And I believe the number they still have in inventory is 90,000 cars. So do they need to cut prices yet again on their cars to get rid of 2022 models? So if we get that report that they have to cut prices again going into earnings, maybe they'll report it on earnings. I think that Tesla breaks lower here. I will not be short of Tesla into earnings. I have options that expire, short options, meaning I sold the options. They expire on the 21st. I think the 21st of July. We will not be short of Tesla into earnings. So even if we have to take a loss, we'll take a loss. But we're not gonna gamble into Tesla earnings. Maybe we'll buy a deep out of the money put, as a hot lottery ticket, but that's it. So Tesla still grinding up higher. So what we did yesterday, I'll go to a 15-minute chart and I'll share with you the thought process of what we did. And that was this, is that we left the day yesterday pretty overbought as measured by the stochastics. So we added another 33% to our short position. That's 10 contracts. So we had going into the day 30 contracts of a put spread on Tesla. So I took those shares off this morning during this bloodbath because implied volatility rose. I knew we were going to get a bounce on it anyway. So we took those contracts off. Nice little swing trade. We're still short of Tesla, still underwater on the trade. But if they spike these shares up higher and they get overbought yet again, intraday, we're going to reshort or add more to that short. But right now, we're just cool. They're going to be reporting earnings soon. So we don't want to be too devoted to a short with such little time left to have that short work in our favor. Let's do some chart requests. Folks, we're going to be using our friends over at TrendSpider Automated Technical Analysis. If you own stocks, you don't know technical analysis, and you don't know where your support and resistance levels are, this is the product for you. Because the computer does it automatically. Tesla did not have a good close today. How do I know that? This blue line here is an algorithm that draws the support level for you, and you can see that we broke support going into the close. Let's do some chart requests. I got to go to the members area and make sure I don't forget anybody. And we have Jody. Jody's here. JD, BA, PA. I haven't taken a look at that one in a while. Okay. Go to the members area. See what they want. Apple and Zoom. Apple and Zoom. ZM. Okay, let's do this. We got 6 minutes. I got to log off. Hard stop at 6 o'clock tonight. How do you know how the machines are positioned? I subscribe to a service that provides me the information on the futures market. I can't tell you how they get that data, to be honest with you, Seymour. So what I've been doing, like with natural gas, is back testing the data. So I haven't really traded all that much off of the report thus far, but the times where I've seen the machines 100% short and then go positive, I've seen a positive correlation between the reporting and the price action. There hasn't been enough of it, but at some point in time, I'm going to be, once I have, if they earn my confidence that this information is accurate, which it appears to be, then I'll begin disseminating the information on a more consistent basis to members in a published version. So more to come. This is not going to be a price increase. It's just I just give it away to my members. It's the way I work. So no additional cost. So I'm just going to publish it on our Slack forum. RIVN. But clearly, back to your question, I think it's a great question. You're welcome. Definitely don't subscribe to something and assume that it's right. I like your skepticism. That's good, and I don't fully trust it yet. So that's just me being honest. Okay. So I'm confident. I'm building more confident as days go by, but I'm not quite there yet. Yeah, sorry about that, Jody. I had to make it an hour earlier today. I got to pick up a buddy at the airport. All right, so and I got a hard stop at 6. I'm so used to saying hard stop at 7. JD. Go to the weekly chart first. Now, correct me if I'm wrong. I believe that this is a Chinese stock, and I know Baba is. I do not condone the purchase of Chinese stocks. Way too wonky bookkeeping over there. And if we go to war with them, they'll delist all of these stocks and you will be left holding the bag. Just like they did with the Russian ETFs here. And if you're an emerging markets fund, make sure that you are in one that is ex-China. Because 30% of those funds are Chinese stocks. And we invest in EMXC. That is emerging markets, no China. Okay, so JD, it had what you call a breakout in time, meaning it just traded sideways outside of a resistance level. It's holding support. Is this a buy to me? No, it's holding support. If you want to nibble with a tight stop below last week's lows, okay. But I wouldn't be a buyer until ultimately we get resolution. And what does that look like? We close up on the week and near the highs of the week, and ideally on volume. Stokes are rising. Momentum is beginning to build. Daily view. Here again, an example of how the automated trend lines work here, folks. Click of a button. Now you see, now you don't see them. Now you do. We're holding the lower band of support. If we break it, we're coming down to this support level here at 33.60. And if that breaks, we're going a lot lower. So just be careful here. But again, I think it could be bought. Just use a stop loss right under at least this support level here at 33.59, 33.60. Next stock, BABA. Weekly view. All right, so what I'd be looking for here, there's a couple of different ways of looking at this. A, you're in a downtrend. And here is your downtrend channel. All right, that's unchanged. That's a known, it's a fact. But here's the optimistic way of looking at it, right? You could just do this. There's a higher low. Now, when does it become a buy? It becomes a buy when it breaks out and above this resistance level here at around 86.50 per share. It becomes a screaming buy once we take out 94.32, because there are a lot of buy stops in above there. What is a buy stop? That's basically a stop loss on shorts. So if the shares move up beyond 94.32, the machines know what's going to happen and sophisticated traders know what's going to happen. There's going to be a short squeeze, and a massive one at that, because what you have is a higher low, and now you have a higher high. Thus, this downtrend channel is now negated. It's persona non grata. It doesn't exist. You're now in a new uptrend. And you will see shorts running for the hills. So I'd be a buyer nibbling in advance of that breakout above 94.32. You want to be positioned for that, because they'll probably gap it up through it, and then the machines are just going to be closing out shorts. Apple, weekly view, still a monster. You know, if you're long of it, I would stay long. I would just put in a trailing stop loss order and let the market take you out. We're down on the week, but the trend is still up. To me, this is a daily chart now. To me, what I'm looking at is, yes, you do have multiple resistance levels above, but I just do this. If you're looking to buy it, what I'm looking at is a potential bull flag setup. I'd buy the breakout. In fact, what I would do is this. Create an alert. Set it and forget it. I wouldn't do anything with this until we get a breakout. So Apple, I remain bullish on until it breaks trend. Zoom. Ufa. Now, this is one of those names. The borrowing costs are going to eat these companies alive. Yields above 4%. These names are not going to do good. I would avoid this. This is a bearish key reversal week, also known as an outside reversal week, because we engulfed the prior week's move. If you're not familiar with this terminology, 5-part video tutorial, my top 5 favorite candlestick patterns, linked below. Take advantage of it. It's free. I think we're coming down here. If we make a new weekly lower low down to 61.11, if we break that support level, we're going down into the 50s. I would avoid this name. If anything, I would be a short of it, especially if they rally it back. We broke support today. Again, now you see the support level. Now you don't. And now you do again just by clicking the button. Broke support. They'll probably try to rally it back in an effort to try to recapture. I would short into that strength. Zoom, I think, is going lower. In fact, if they rally it back, I may just short it myself. Okay, last one up is Rivian. I saw my first Rivian at the yacht club. I'm not a member of the yacht club. I was invited out this weekend. It was all right. Not a good. It was just a truck. There's nothing special about it. It was big. It was a big sucker. This chart looks really good. This looks really good. All right, so here's a shot with Rivian. I would do this. I would be a buyer of Rivian on retest next week of support. That's it. That's a shot. That's how I would play it. Let's take a look at the daily chart. This above here is resistance. It's the 9-period monthly exponential moving average. And you may be saying, what are you talking about? You want a daily chart? I overlaid on this daily chart monthly resistance. So beware. This is the value of TrendSpider. This is multi-time frame analysis. This is no joke. You're not going to find this with other charting software. 35% discount code below. I use it all the time. So beware that you have resistance above. Although you may not see it on a daily chart, on a monthly chart, that's where your 9-period exponential moving average is. I'd be looking for a pullback. I'd be a buyer of the shares on any pullback. And in fact, I like the chart so much. I want to take a look at, I got to get going here, the options. See how expensive they are. Ooh. Options are expensive. Members, expect a trade tomorrow on Rivian. Awesome. We're going to be trading Rivian tomorrow. Folks, with that, everybody have an awesome, awesome night. Did I did not see your announcement sent out? Yeah, I sent one out. I sent them out. Yeah. Usually I forget, but I was good today. No lounge for me. Not tonight anyway. Folks, I'll catch you tomorrow. Thanks for being here. And like, subscribe. You know the deal. Everybody have an awesome night, profitable trading day tomorrow, and have a great weekend. Be well.